Well, we want to welcome and thank you all for your continued trust. Palmgren Retire Plan, as we endeavor to do our best to continue to grow and protect your retirement portfolios. We certainly thank you for listening in this month's market update. And as COVID cases throughout the country, many areas are rising and additional business restrictions are being in place, I want to apologize. Our attempts to meet together in person this month never really transpired. But know this, we hope to be able to reschedule those meetings and meet together in person soon. And along that same case, there's been some bright news since our last market update in the world of COVID, that of a COVID vaccine. Early results from Pfizer's potential vaccine show wonderful effectiveness. And from a financial perspective, this has given way to what we'll call the beginning of the end of the COVID tech rally, as all of us have had to adopt new ways of doing things because of COVID, and certainly the many technologies that have benefited these last several months because of which. So we'll see here in this month's market update, we'll use the term of a reversion to the mean. So what do we mean by that? Well, notice here in our first illustration. Now, several times we've mentioned before the difference in the diversion between large cap growth and value. So growth stocks versus value stocks. And when we look at the indexes and we see market performance year to date, we want to keep in mind that large cap growth as its combined total market cap that's highlighted there in orange is over $8 trillion versus on the right, large cap value of about $6 trillion. So the sheer weight of large cap growth over $8 trillion has impacted indexes such as the S&P 500. Its movement will drag everything, the whole index along with it because it carries larger weight. So with that, we see here, once again, we've shown this before, this divergence between the two styles, the growth and the value. Large cap growth being of significant divergence. We see on the left side, value stocks being down 10%, whereas growth up 40%, just rounding there. So we see a divergence of about 50% in index performance. It's very large. You go down into the small cap space as well, divergence of about 40% between -20 and +20%. So that weight that the large cap growth style carries has positively impacted the S&P 500 index when we turn into our favorite news source to see how the markets have done that day, keeping in mind this divergence that value has still suffered greatly year to date. But what, as we mentioned here, this reversion to the mean, what does this mean from a financial perspective? Well, what we've noticed here since the early results of the COVID vaccine, potential COVID vaccine, in just the week that followed that, here on the left, we notice the large cap growth performance, its 1 week number is up 1%. However, here's our reversion to the mean. We see that the large cap value almost rubber banding back as things start to shake out. The 1 week performance of large cap value is up over 7% in just that week. And that's interesting because, as mentioned here, we go back to our previous illustration, we see here the high flyer growth is not done so well since this news, whereas large cap value is starting to rebound. And we're going to see that, we expect to see that as well in other areas such as small cap, which we see here. Its divergence between the growth and the value was about 40%. And here just in the 1 week numbers, the small cap value is starting to rebound. Notice over 10% in just that 1 week period of time. So keeping all this in mind, what does this mean for you? Well, as mentioned in the last couple months, that we were foreshadowing and looking towards a time when we start to invest some of that cash, the high cash positions. And at this point, we feel that that it's time to now begin reducing cash positions and adding to some of these stock sectors that I just mentioned, the large cap value, mid cap value spaces. And those are stocks that traditionally are more conservative, have higher dividends, higher dividend yields, often used in retirement portfolios such as yours to offset income. So we appreciate you listening in once again to this month's market update. And as always, we're interested in answering any questions that you may have or having a meeting to discuss your portfolio. So if so, use the link at the bottom of this email to book a meeting on our calendars. We hope to see you all again soon, and thank you once again for listening in.